All right, thank you so much, Dan. I want to welcome everybody that is here today. First of all, I want to thank you, Dan, for inviting me here today. It has been a wonderful, wonderful day so far, and little by little I have listened in on the other market specialist presentations, and they were fabulous. So great group of people today. So guys, I want to welcome everybody here today, and thank you for taking time off your busy schedules to attend this presentation and for attending MarketFest. My name is Anka Metcalf. Please excuse my voice. I have been sick for more than a week and a half right now, and a few days ago just lost my voice. I wasn't even sure that I was going to be able to talk today. But thank you so much for thanks for my friends. Some of you guys are here today, and thank you for the advice that you gave me and all the natural remedies. I have applied them in 2 days, and here I am today. So thank you so much, guys. So if I will by any chance sneeze or cough, I will try to press the mute button as quickly as I can so you guys won't be able to hear that, okay? So please excuse my voice once again, and let's get through with our presentation. And I have a real treat for you guys today. And today I will be speaking about how to fast track your trading with one simple winning strategy. And basically this is all you need in order to be a successful trader, is one strategy. That's going to make you money if you master it. So here today I'm going to speak to you about this strategy, and I'm going to speak to you about all there is to know about this strategy. So it is a winning strategy revealed from A to Z. It is very simple, and you're going to be able to apply it as quickly as after the session. So quickly apply it. If you're a futures trader, you can apply it, you know, in the overnight trading. If you're, you know, a day trader, you can apply it. You can apply as quickly as, you know, starting tomorrow, because I'm pretty much going to wrap up at 3 p.m. So it's not going to be so much time within 1 hour. But it is that simple, and I'm going to show you exactly how to do it. Okay. So I'm just going to go on. Before we continue, it's very important that you please take a second to read the risk disclaimer. And basically what we're saying here is that we're not registered nor licensed, and if you feel the need to seek financial advice, we advise you to consult your financial planner, advisor, or broker. So please take a second to read this risk disclaimer. Okay, so a little bit about myself. For those of you that do not know me, I know there are a lot of people in the room that already know me, but I have been a professional trader focused on equities, futures, and currencies for the last 10 years. So I've been doing this full time for many, many years right now. I'm the CEO and founder of TradeOutLoud.com, and this is a day trading education firm, and also investing education firm with a lot of products and services that are unique to the industry. So please visit TradeOutLoud.com for more information on that. I'm not going to waste you know, your precious time with this, so you could check it out later. The company was founded in 2011. Before becoming a professional independent trader, I come from the finance industry, and I have over a decade of investment banking experience. And I have been certified by numerous financial institutions throughout Europe and U.S. I do run a managed accounts program for a group of high net worth clients, so I do trade other people's money as well. I'm running a very successful swing and investing signal service for equities, for U.S. equities. And I'm the designer of a proprietary trading system that you can trade equities, futures, or currencies. And the system is based upon price support resistance, correlated with trigger times. There are precise trigger times in the market. And for those of you that day trade, whether you trade equities or futures, you know that there are 5 major trigger times in the market. So I'm going to go really quickly on those trigger times. And this is going to be actually like a little bonus. If you have a pen and pencil ready, I'm going to give you those trigger times in the market. So if you're ready, guys, okay. So 9:35 a.m. That is the first trigger time in the market for equities and futures, the first setup that occurs on the 1 minute and the 2 minute charts for those of you that are aggressive traders, okay? And then there are 4 more trigger times that are aligning once with market confirmation of direction, and those are for the 5 and 15 minute charts, so these are for the trend traders, and also they come with a lot of confirmation, and the trigger times are 10:30 a.m., 11:45 a.m., 1:15, and we already had a beautiful waterfall going down right now that actually triggered at 1:15 in the market. PM and 2:45 is the last trigger time in the market. So these are the precise trigger times, and I know I get a lot of questions about these, and I mentioned them. And I thought it would be just fair to you to actually reveal these trigger times. So price support resistance correlated with these precise trigger times, guys. And trust me when I tell you, watch the market and the time frames at these certain times. You're not going to find them anywhere on the internet. This is proprietary information. It comes from years and years of experience. Okay, and also this with chart correlation and a strict set of trading rules. I am a permanent contributor with I'm a permanent contributor to a lot of magazines. One of the magazines that I contribute the most is Trader Planet and Benzinga. Also in Detroit, Crane's Detroit business. With Market Deal as well, we have a great relationship where I send the trade of the week, and that is for equity swing and swing trading or investing. But you could have you could look up you could either Google my name, and most of the articles are going to pop up on the browser. So why should you choose TradeOutLoud? Well, I have a few reasons here. Well, first of all, we are most trusted source for education, coaching, and programs. We are third-party verified. Our education has been verified. We have an excellent feedback from our worldwide traders, and literally we have trained thousands and thousands, I would say as far as tens and thousands of traders, and we received excellent feedback. You could surf the net, Google our company name or my name, and you're going to see that you're not going to find anything negative about us. And we have over 10 years of professional trading experience, so not only that, we are offering the education, but we're backing it up by our experience and our live trading. And I think the most important thing is that we have a public third-party verified track record, and I don't know many of the traders that can actually provide this. There are a lot of companies out there, but none of them have third-party verified trading. We have a winning batting average of 75.50%, and you can see right here, these are some of the trades that were done by the end of September, and you can see right now the portfolio up 21.45% and the S&P 20.72. So we beat the S&P for the 4th consecutive year in the row, so since the inception of our TradeOutLoud, of our company and our signal service. So here you have it, some of the reasons why you should listen to me and why you should listen to us, and some of the reasons why you should pay a little close attention and learn from our experience. We'd love to share it with you. If you want to stay in touch with us, you can email us anytime at info@tradeoutloud.com. You can find us on Facebook. It's facebook.com/tradeoutloud. On Twitter is twitter.com/Anka Metcalf. And again, guys, if you want to receive emails, and I usually send out once a week an active investor newsletter with some trade ideas, and that is at TradeOutLoud.com. You're going to have a pop-up window to just fill in the information there. You're going to be able to be on our emailing list. We're also going to start a year-end, because this is the most active trading season of the year, and we're going to start our free workshops with free trading workshops as early as next week. So hopefully my voice is going to get better, and that's going to be very exciting. So these are free events that you're more than welcome, and the only way you can find out about these are if you're on our emailing list. All right. Here's today's agenda. So today I'm going to reveal to you this simple strategy. So first we're going to start with the definition. I'm going to give you the full trade criteria, what to look for, what not to look for, what to pay attention to, the process, how to find the trade, how to enter the trade, how to set your stop, how to set your target, and so on and so forth, so the whole process. And then there are some rules to consider. And believe me when I say this, but you have to automate your system. You have to be able, you have to embrace the high-frequency trading machines and learn something from them, okay? There are good things there are very good things that we can learn from them, and one of them is how to automate your trades. That's why they have such a great batting average. That's why they have a high success rate. And guys, they make 75% of the market volume, right? So they're doing something right. So we have to learn from them. Also, the complete trade plan, guys, I'm going to give you exactly what to do at certain times, how to do it, and when to do it. So the complete trade plan for this specific strategy. I'm going to give you the list of complete market indicators and complete indicators that I use on my charts. And also I'm going to give you a bonus, and this is the exception to the rule to this, and this is for only aggressive traders and traders that have been trading for a while and know what I'm talking about. But this is a great bonus that you can add to your existing strategy. And chart analysis. It's very important to exemplify and to show you exactly how the strategy works on charts. And we can, if we have enough time until 3 p.m., we're going to go to some live charts and see what the market is doing right now. And we're also going, because I would just, as Dan was speaking, I was just looking at the market right now, and we had a little breakdown in the cues for those of you that are, watching the market indices, that are watching other stocks. There are the strategy that I'm talking to you about today is happening more and more and more. We're going to talk about that one as well. So long story short, this strategy is for everybody in here in this room that is a beginner trader and doesn't have a strategy that is doesn't have a strict strategy that they're making money with, or it is for advanced traders that want to incorporate another type of strategy. Maybe you're a gap trader, maybe you're a trend trader, and maybe you want to incorporate this strategy that I'm going to talk to you about today as well to your portfolio. It's an extremely profitable strategy. All right, this is it, guys. It is the breakout and the breakdown is my favorite. So for those of you that that know me, know that I have been trading with me for a while, know that I have been focusing on this strategy for a very, very long time, and I have been able to master it a lot and perfect it a lot. So guys, it is a simple, mind-blowing, powerful strategy. And again, guys, for those of you that are beginner traders, you better take notes here, because this is something that is going to bring black to your portfolio. It's going to bring you a lot of money. Okay, so why this strategy? Why did I pick this strategy? Well, first of all, it is super simple. You don't need to have advanced knowledge of technical analysis for this. It is super simple. It is great for beginner traders, like I said, for those of you guys that are just starting in the business, that are just finding out about trading right now, or have started a couple of months ago. This is a great strategy, because it's not something complicated that you need advanced skills for it to identify a setup. It works great, guys, for day trading, swing trading, and investing. I have examples for that. And for those of you that are day traders, oh my gosh, this is the bread and butter. Love. And for swing trading and for investing, I'm going to show you how profitable this can be for you. Also, it is applicable to stocks, ETFs, and futures. No forex, guys, here, okay? So it doesn't work for forex, but for stocks, ETFs, and futures, this is amazing. Okay, and it's easy to identify. One glimpse at a chart, and you can identify. I'll show you how to do it. It's so super simple. It is simple to understand, like I said, easy to apply, guys. Very easy to apply and easy to trade. Okay, so there are only 3 steps that you have to, 3 steps basically that you have to respect in order to be successful at the strategy. And guys, you can, you could definitely use it. Absolutely. I'm just reading through the questions right now. you know what? I do have a 15-year-old, actually, we have a friend that has a 15-year-old son, and he's trading it, and actually, he is actually mastering right now this strategy. It is super, super, super simple, guys. Okay, I'm going to put up the last slide, guys. All right, this rocks. Okay, this is the last slide. And for those of you guys that want this presentation, please email me at info@tradeoutloud.com, and I'll be very, very happy to send you this presentation. But I know that Dan is recording this, and you're also going to find out. You're also going to be able to re-listen to this archive link. Okay, guys. So let's dig deep into this. All right, definition. It's super simple. The presentation is super, super simple, guys, and we're going to get into action right after we wrap up all the criteria. My email is, I'm going to type it right here, guys. It's info, okay. It's info@tradeoutloud.com. Okay. All right, guys. I'm going to give you all these details later on. So you can contact me anytime, okay, guys? All right, so what is a breakout and what is a breakdown? It is the price action movement through an identified area of consolidation, okay? A consolidation, that means a range. That is a base. That is kind of like a Christmas tree effect. You see one green bar, one red bar, one green bar, one red bar, pretty much kind of like the same size, okay? So here it is. Resistance, right? When the price breaks above that range, it's called a breakout, all right? And when the price breaks below the range, below the consolidation, below the base, that is a breakdown, okay? So there are other things that you need to keep in mind here, and I'm going to focus on these. Just remember one thing. The powerful breakouts occur, and you can write this down, guys. The powerful breakouts occur only into an uptrending stock on any time frame. So if you're a day trader and you're trading off the 2-minute chart, if you have an uptrending stock that is going, or if you're trading futures, okay, and if you have an upward price movement and all of a sudden you see a pause in price, because sometimes stocks, ETFs, E-minis, they run up, all right, and then they take a breather, okay? They need to breathe a little. So bulls are getting a little tired. They need to take a little breather. Sometimes they pull back, but sometimes they just hold that support level and form a shelf. Now that's the bread and butter. That is the consolidation. That is the base. That is the range that I'm talking about. So that pause right there is just that pause before the breakout. Okay, it's that pause before they catch up their breath to run higher and even sometimes faster. Sometimes you're going to see these breakouts because, in some cases there are a lot of high-frequency trading computers that are their algorithms are programmed to select breakouts and so on and so forth. And there are a lot of traders that also focus on the strategy. You're often going to see this breakout occur on very high volume. Okay, so that's why they're super powerful. And even for a scalper, you could sell at the top, sell into the next resistance area, and you made your money and you're done. But if you're more of a trend trader, you could just, trail it further. And the same thing for a breakdown. Select the stocks or E-minis or ETFs that are in a downtrend. So they're accelerating down, and all of a sudden, the bears get tired, and they need to catch their breath. So they pause. Sometimes they pull back, right? They retrace, but sometimes they pause, and that pause forms this consolidation. That pause, makes, accumulates price even more and powers down even faster after the breakdown occurs, okay? I'm going to show you some examples to see how this works. So price breaks out or breakdown is usually followed by heavy volume and increased volatility. That's the beauty of it. And then the breakout trades are the starting point of future volatility increase and large price swings. Guys, if you're a day trader, you can make a lot of money off this. If you're a swing trader, by all means, these are really, really powerful things. And if you're, again, an investor, a hands-off investor, you know, the type of guy that only scans the market once or, you know, twice a month, and you find these bases, you know, they're going to bring you so much money, it's going to be ridiculous. I'm going to show you some examples. All right, here's the concept behind it. The markets move from periods of high directional activity and volatility to periods of rest and consolidation. Like I said, whether it's a bull market, you know, it rallies up and then it needs a breather, okay? Look what the market did. Look at the cues right now. Remember the huge sell-off, all right? Broke support at some point at the daily chart and found a bottom, all right, and rallied up close to climactic. And now it's taking a little bit of breather, right, which is normal. And again, guys, it's midterm election, so usually markets rally into election dates, right, into election period. That's what happened 2 years ago, right? That's why we had the beautiful, beautiful swing trading year, right? And we're going to have that again in a year and a half from now. We're going to have, because it's cyclic, all right? Okay. The cycle repeats itself in almost every active volatile market. So these are things that you need to pay very, very close attention to. The consolidation breakout strategy seeks to enter the market at the inflection point where a market is moving from a consolidation phase to a trend phase. Now, what does that mean? Let me put it into simple strategy words. Just imagine this is a market. This is just the way the market moves. It comes from point A, let's see here, okay, and it pulls back, it ranges, and then it takes off, okay, and then it ranges again. Oh, sometimes it continues higher, but sometimes it breaks down, okay, and it consolidates again. These are the four most important market stages. Okay, these are actually the only four. Yes, I will show live charts. These are the four only market stages. Okay, and the market is this is a full cycle of the market, if you will. Stage one is the consolidation phase. It shows. It doesn't have a clear direction. We don't know at this point whether the market is going to go up or down. We're waiting, of course, for whatever the the event might be for the day or the week. In some cases, pending FOMC meeting, ADP non-farm payrolls, different kind of news, different kind of events, geopolitical events, and so on and so forth decide the movement of the market. When there are not a lot of events happening, we mostly see a trending market. Okay, so this is the consolidation phase. This is the phase when the market is going to decide what to do, whether it's going to break out right here at this inflection point and continue higher. Sorry about that. Or if it's going to break down. Okay, so stage number two is the accumulation phase. This is the greed. Well, everybody buys. And at some point between, some point in this accumulation phase, there might be occurrences of consolidation. So the stock might not go up higher like this, but it might continue higher and pause a little, continue higher, pause a little, continue higher, pause a little, continue higher, pause a little. Okay, but this is mainly the accumulation phase. And then it comes again into a stage three. Okay, and I'm going to show you exactly on live charts, even on the cues today. Or if you have a chart that you want to share with me, more than happy to look at the chart for you and give you my take on it. Okay, so stage number three is pretty much the same thing as stage number one. So you're going to see the similarities between stage one, stage three, and stage back one again. Stage three, again, is the consolidation phase, is the decision phase. If we're having a really, really strong stock, a really strong ETF, a really strong E-mini, you're going to see that after this breakout of the consolidation, we're going to enter the stage two in the accumulation, We've reached this plateau right here, which is the consolidation phase, which is, again, that range, the bread and butter that we're talking about today. And we're having a very strong market. We're going to expect a breakout here. So this is very, very strong. It's going to break out higher. And usually in an uptrend, this is what happens. So remember, base, accumulation, base, continuation. Okay? And for the downtrend, you're going to see that we're going to have a stage 3, where it's pretty much stage 3 is the same as stage 1. You're going to have that breakdown into a distribution. You're going to have that plateau again of consolidation, all right? And you're going to have a breakdown again, continuation, okay? So this is how it works. So remember, the stock is coming from somewhere in point 1, it's consolidating, all right? Going to point, going into the accumulation phase, consolidating again, and if all the factors are aligned, it will continue higher, okay? It will definitely continue higher. So for uptrends, guys, look for these breakouts, and for downtrends, look for breakdowns. I agree, and at some point, when the market is reaching resistance, even in an uptrend, you might find breakdowns that work, but not that often. Remember one thing, guys, you have no reason at any point to short a very, very strong market. It's always easier to go and swing with the trend, trade with the trend, play with the trend, okay? Guys, I didn't invent this. The trend is your friend. When you're taking a counter trend trend, you really don't know how much of a retracement you're going to get, because if you're going to get positive influence right away, you might have that stock just pull briefly, not even to a 25% retracement, and then take off again. All right, so that's why it's better to work with the market on your side. Okay, so a breakout is a stock or a mini price action that moves outside a well-defined area of support and resistance on increased volume. Now, in some cases, you're going to find a very tight range of bars, you know, one close to the other, pretty much the same size. Sorry. Or just like in this case below, you're going to have kind of like this zigzag, okay? Kind of like this zigzag right here. So there are different kinds of bases, and I'm going to show you charts how to work on these. So a breakout trader will enter a long position after the stock ETF or E-mini price breaks above the resistance, all right? So you want to get with confirmation. You don't want to get it somewhere in the middle, because you need to have a confirmation of price. We're not liquidity providers for the market. We want to trade with confirmation, okay? We're not liquidity providers. We don't donate to the market. We just want to make money from them. We want to take their money. We don't want to get, we are so greedy. I don't want to give anything back, all right? Or I don't want to give the market anything, but I want to take everything there is, okay? And a breakdown trader enters a short position only after the stock, ETF, or mini price breaks below support. Again, wait for that test, 1 or 2 pennies below that support area. Wait for the price to break that number. Okay, wait for the price to give you the precise confirmation that it can do that. It has to prove to you that it can definitely do that. And just remember, the trade only has high odds of success if the stock is respecting the general trend of the whole trade, meaning the continuation of the trade. So, look at the example below. The trade is coming from point A, from right here, climbing. So this is the plateau right here. This is the consolidation phase, phase 1. It's going into that phase 2. This is the accumulation phase. And again, stepping into a very large and sloppy phase 3 before continuing higher. Okay? This is the breakout point right here, resistance. This is what you do. All right? You wait for confirmation. Okay? You wait for price confirmation above the range in order to get in. I'm going to talk more about that in the trade plan. Okay. Here's some quick steps that you need to follow on each and every single trade that you take for these breakout and breakdowns. Number one is to have a well-defined method of finding the trades that meet this strategy. Well, first of all, you've got to find out whether you're a day trader, a swing trader, or an investor, okay? So you know at what time frames to look. For day trading, guys, you can apply the strategy on the 1-minute chart, 2-minute chart, 5-minute chart, 15-minute chart, super powerful. These are the two most powerful charts, the 5 and 15. And I highly advise, for those of you that are beginner traders, to start looking at the market and start trading the market after 10:30 a.m., all right? Because there's a lot of fleecing going on from 9:30 to about 10:30, okay? So just please, guys, please take a look at those after the market has set and after your stock that you're watching has established a trend and you know for sure which way it's going to go, okay? So this is for beginner traders. Tick chart, I usually advise traders from, to look at 10:30, I advise traders to look at 5-minute charts. And as they go throughout the day, 11:45, they should switch to 15-minute charts and they should leave their charts on 15-minute for clarity. But for those of you that are scalpers, by all means, you can go ahead and still have your 2-minute charts up. Okay, so you can still trade. If you're a scalper, you can still trade your 2-minute chart. But for more clarity, and especially for beginner traders, I advise them to stay away from the 2-minute charts, okay, because they can be very, very noisy. 2-minute charts are more for traders that really know what to do. Excuse me. Okay, so 10:30 is the second most important trigger time in the market for trend traders. Focus on the 5-minute chart and try to look for these bases. So have a well-defined method of finding trades that meet your strategy. So how are you going to find the trades? You're going to start scanning. You're going to scan for ranges. Either I don't know what platform you're using. I do use a Thinkorswim platform. If you're using a Thinkorswim platform or any kind of platform like TradeStation or what have you, you could actually go to your watch list, go to your NASDAQ, go to your S&P list, sort them ascendingly or descendingly by net change. Let's say, for instance, take the first 20 or 30. I really don't play high-price stocks, like high-price stocks, meaning like the Netflixes and so on and so forth. Okay, I try to keep a range close to $100, even a little over $100. Now, like with this market popping higher, yeah, because like everything is about over $80 or $70, but there are still stocks that are ranging between $50, $25, and so on and so forth. So and especially for beginner traders, these are the bread and butter. Okay, so scan for ranges. Using those market minders, look for the 5-minute charts. These are the most powerful. But if you're a scalper, you could definitely use smaller time frames as well. Use a scanner. Trade Ideas. I personally use Trade Ideas. Been using it for close to 9 years. Or use MadScan. That is a free scanner, by the way, guys. You could definitely go ahead and use that. Or using websites like BarChart or FinViz. All right, these are free, guys. These are all free. FinViz, you could go to heat maps, and you could actually see what's in play for that particular day. You could see what are the hottest stocks that are having the best gains and what are the worst performers. Okay, have them color coded as well. Or go to barchart.com, go under the stocks tab, and actually on the left-hand side, you're going to have a column, and you can even find ranges there. There are ranges that are advancing and ranges that are declining. You can even have that there as well. But there are all sorts of scanning methods. So even freestockcharts.com has an incorporated scanner as well. So there are different methods. All you need to do is use something that you like, that you are happy to use. So pretty much you have to have a whole system that is put in place, okay? The next thing that you need to do is identify the market conditions. So it's always good to correlate your stock with whatever the market is doing. So what I mean by that is that if the market indices like the Qs, the SPYs, the diamonds are very powerful for that particular day or very strong, you should go for very strong stocks. And why is that? Well, because a strong stock within a strong market, a stronger stock than even the market that is outperforming the market, has higher odds of advancing and having a follow-through higher. Because you really don't want to sit in a trade, you know, like a sitting duck watching paint dry. You know, you want to move where the action is. All right, and this is the one way to do it. Look at the market indices on one side. Look at your stock on the other side and compare. What is stronger? Is it your stock that is flying higher, or is it the market? Okay. Usually for strong market, pick high flying stocks. Okay. And for weak market, pick weak performers because they're gonna have the power to run lower. Okay. Even without much of the market help. Okay. So strong market, stronger stocks. Weak market, weaker stocks. Okay. So always, you know, have that game plan with you, and pair the market. Don't select a very weak stock in a strong market. Okay, it's going to have a hard time. It's going to fall at one point. It's going to fall, but it's not going to have that fluidity. Okay, when you want to get in the trade, you want to see some action. You want to see that some green on your P&L. You just don't want to sit there count pennies. Okay. The other thing is that you have to identify the consolidation areas. Whether it is that you are trading the 1 minute, the 2 minute, 5 minute chart, whether you're a day trader. Also super powerful for swing traders, but also for day traders, and that's that breaking point right there is the 1 hour chart, super powerful. And if you're a trend trader, look at that chart, especially at 12:31 p.m. That is getting closer to that fourth major trigger time in the market, that is at 1:15. That is super, super powerful. And a lot of these breakouts can occur at that time at 1:15 p.m. So make sure that you identify the consolidation areas and have a game plan set up before you even take the trade. Okay, we're going to be talking about that. I have a question here. What about range or Renko bars? I do use candlesticks. I'm going to show you just in a minute my charts. The next thing that you need to do is to define the exact consolidation area, that range, that base, those parameters. And define your clear support area, your resistance area, and your projected targets. And guys, it is as simple as that. I'm going to show you on the charts. By identifying the exact parameters, the support, resistance, and projected targets, you're going to determine your exact buy and sell areas and stops. And guys, you're going to have your own signal service. You're not going to need anything else. All you're going to need to do is identify these areas. It's going to be so simple for you because once you have this game plan and you're going to see, okay, I have a strong market. Good. I have a very strong stock right beside it. So I'm going to focus on this chart. This stock is just the stock is giving me the range. I have a clear support area developed. The stock is in an uptrend. I have a clear resistance area. So what's the game plan? I take it 2 pennies above the resistance area, place my stop 2 pennies below support area, okay, and place my stop into the next resistance area on the particular time frame that I'm trading, okay. And there you have it. That's your game plan, and that's your trade. That's all you need to do, okay. And the last step is from this point forward, your trade should be on autopilot. Remember what I said about learning, learning from high-frequency trading computers, okay? It's the most important thing, okay, that we need to learn from it. We need to be organized just like, and one other thing that I want to mention is once you see a setup that fits your plan, you take it. You take each and every single trade. This is the key to success in day trading, swing trading, or investing. You take all the trade setups that meet your criteria. There's no cherry picking, Guys, once you're going to say, you're going to pull back, and you're going to say, you know what, I'm looking at this, this looks good, but you know what, I don't think I'm going to take this stock. I'm going to move on to the other one. No, it doesn't work that way, guys. You see 1 or 2 or 3 trades, you have to take them all and position size accordingly to, you know, so you can take all of them, okay? Okay. I'm going to get back to all the questions, guys, right after the presentation. So we just have half an hour to go. And we're going to have probably more than 10 minutes to for questions. I'm going to go back, scroll back, and answer all your questions. Okay, these are 7 rules that you need to consider. Well, first of all, a breakout or a breakdown trade will be considered in an ongoing trend for higher odds, not offs here, guys. Sorry, I must have been on NyQuil here. Okay, higher odds of follow through. Like I said, we don't want to sit in that trade and see the P&L go to nothing. Okay, we want to see that P&L go green and green and green. And in order to do that, we have to pick a very strong stock for a very strong market in order to propel it higher, and we need to select very weak stocks in a weak market to have a higher rate of acceleration lower, therefore to have higher odds of follow through lower, faster to our targets. I don't know about you guys, but once I get in a trade, I really wanted to go really super quick to my target. Okay, I just hate it when I get in and just sit and I sit and I sit. And one of the best criteria to find these trades that are going to fly to your targets fast is this one right here. Go with the trend and select the strongest stocks for. And one more thing, guys, if you're a stock trader, pick the sector that is the strongest performer for that specific day, and pick the strongest stock from that specific sector and run with it. That's the way to do it, guys. That's the way to do it. Okay, the consolidation area, so that base, that range, should be defined by very clear support and resistance. So I don't want anything that is whippy, okay? I don't want anything that it breaks support, breaks resistance, and it's just nonsense. I just move on. There are 6,000 other stocks that I can pay attention to. If you have a scanner or use a scanner, it's going to pop up, you know, trades. And by the way, guys, if you have a scanner, okay, like I said, I use Trade Ideas, been using it for a lot of years. I have my scanner set to select. I have 2 windows within the scanner that automatically selects my criteria, my criteria for these ranges, for these bases, okay? And one of the things that I think it is very important to mention here is not only that you have to pick like really strong stocks in a very strong market environment, but one of the things is that when you select your stock, make sure that your stock has a lot of liquidity in it. Make sure that your stock is trading at least 1 million shares or more by 10 a.m. All right, I usually pick stocks that have a lot of volume, you know, like Microsoft and Cisco or Intel or Apple, or pick stocks that are very, very tradable, especially for day trading. Don't pick stocks that are 200,000 shares traded for that day at noon, okay? That's going to have probably a wide spread, and it doesn't really make a very, very good day trade. Okay, for a swing trade, perhaps maybe depends on the conditions and what the company is, so on and so forth. But other than that, pick very, very strong with high volume stocks. It is advisable and recommended to wait for price confirmation, meaning wait for the price of the asset to prove itself, to break that resistance area for long positions, and to break down that support area for short positions. It is very important for price to prove to you and prove to that stock that it is ready to bite a new high, that it is ready to climb up a ladder on a breakout, or is ready to waterfall down below that support level. It is very important, like I said, to wait for those confirmation areas. Very important, okay? You don't want to be liquidity provider like I've mentioned. The entry should be considered only above resistance for long positions and below support for short positions on any time frame you are trading, whether you're a 1-minute trader, a 1-hour trader, or a monthly trader. Okay, I'm going to go to charts. I'm going to show you. Stocks will usually be placed under support for long positions and above resistance for short positions. Okay, and there's a reason for that, and I usually give them a little bit of wiggle room, and especially for swing trades. Lately I mean by the last year or so, I have been giving them the soft stop treatment. What that means is that I have an open stop, although I position size for that particular stop. I don't put a hard stop in because of the tremendous fleecing that is happening at the beginning of the trading day. I don't want to be taken out and then to watch the stock continue my way, okay? So I'm just pulling my stop out. I don't put a stop, but I position size for that particular stop, for that particular resistance area, let's say, if I'm in a short, or support area that if I'm in a long, okay? But I want to alleviate myself from being taken out of a good trade, okay? Targets will be set into the next resistance or support areas. And it is very important to, once you take a look at the trade and once you identify the base that you want to trade, make sure that you have in front of you the whole picture of the stock that you're going to trade. And for this, what I mean by that is make sure that on the trading monitor, you have all the time frames of that particular stock so it doesn't catch you by surprise. Because remember, one of the criteria for these setups to work is to have a perfect chart correlation. And what I mean by that is that if the daily chart is in an uptrend, you have to make sure that all the other time frames are in an uptrend, okay? You want to make sure that if you're having a 15-minute breakout, the 1 minute is not really trying, or the 2 minute or the 5 minute is not trying to go on the other side on you. You want to make sure that all the charts are correlated and all of them are pushing in the right direction, okay? Because sometimes, you know, not even, you know, with bases, it is easier because you have to use that consolidation. But oftentimes, a lot of traders have a lot of problems. And I do hear about them because they do come to me about it, and they said, oh, I took a perfect 5-minute buy, okay, right here, and they show me the chart. They send me a picture of the chart, and I say, yeah, that's a perfect 5-minute buy. Or what about the hourly buy? How is the hourly buy? And the hourly was in a sell. All right, so the hourly was not correlated with the 5-minute buy. Okay, the 5-minute buy was fine, but it was starting. The setup was starting to degrade into a sell on the hourly. So that's why it didn't work. So that's why you need to have a perfect chart correlation. So when you look at the chart, when you look at your trade, make sure that whether you're a scalper, a swing trader, or an investor, you got to have all the time frames. And by that, I mean you got to have your 1 minute, 2 minute, 5 minute, 15-minute chart, hourly chart, daily chart, monthly chart, I'm sorry, weekly chart and monthly chart. You have to have all these 8 charts on the screen for you at all times in order to see the correlation. Once you have these on your screen, you're going to see how easy your life as a trader has just become, okay? So remember, put your, place the stock on your screen. And I'm going to show you a picture of my trading monitor after this, so you can take a look and see what I'm talking about. But you're going to see how easy it is. Once you type in a stock, you're going to do a top-down analysis, and you're going to start with the largest time frame, zooming in on the closest time frames to your interest, and you're going to see how easy it's going to be. You're going to see how you're going to be able to analyze a stock in less than 15 seconds. All right, so it's gonna make your life so much easier. And after all, guys, trading is easy. We have the tendency as humans to overcomplicate it. But trust me when I say this, trading is easy. And once you stick to very simple rules, you're going to have higher odds of success. Don't overcomplicate it, and don't be that trader that says, oh, I need to know this, I need to know that, I need to do. Yeah, you do need to have a good baggage of information, but you need to have the basic information. You don't need to be a super expert, okay? You just have to have the basic technical analysis knowledge in order to continue, all right? All right. One of the last things here is that once the trade triggers, the trade will be trailed according to each trader's trailing system. All right? So if you're a beginner trader and you don't know what a trailing system is, you got to leave everything aside and look into trailing systems, because when you're in a trade, and trust me when I say this is a very short story. I've had a trader, I think it was like 2 years ago. Amazing guy. He's a doctor and he just retired, and he's trading. I taught him. He took the futures trading course for me, and he started to trade futures. Before that, he was trading forex, and he had been trading forex for, I don't know, probably 4 years before that, and hadn't made any money. He took the futures class. He started to make money, and one of the first emails that I got from him was, he was crying, he was in tears, and he actually called me right after he sent an email. And he said, oh my God, you wouldn't believe it, I had 2 winning trades. And I said, oh my God, that's amazing. Well, how did you do? He said, I lost on both trades. I was like, how's that? And why are you happy? He said, I was so happy because I was never up in a trade in my life. And I was happy that I got it, and I know how to identify a winning trade, but then again, I didn't know how to trail it. So the thing is that once you identify, where to get in to a trade, you have to have a very good trailing system. So you have to have a plan ahead of time. So here's the base. You have the setup. You have your entry, you have your stop. You know that if it's an uptrend, you take it above resistance and you place your stop below support. But what's the game plan? You know where your target is because it's into the next resistance area. You don't have a resistance area, I'm going to teach you how to use pivot points, all right? I'm going to teach you how to use Fibonacci projections if it's at all-time highs, right? But if it has a resistance area, all right, prior resistance area, that's most likely going to be the next target area for your stop. Or let's do psychological areas like whole numbers. That's going to represent a target area as well. And how is it going to get there? Do you have a management plan? For very beginner traders, there's a system in place, and you could go by bar trailing depending on the chart that you're trading. So let's say you're a 5-minute trader. If you enter on a 5-minute chart time frame, and that's valid for any other time frames. Sorry for that. So if you get in on the 5-minute chart, you have to trail on the 5-minute chart. If you're a beginner trader, go bar trailing. What is that? It is a candlestick trading. It is also called bar by bar trailing. All right? So once the candlestick forms, place your stop below the previous candlestick, and so on and so forth. As the stock is advancing or the E-mini is advancing to your target, you're always protecting your profits. If you're more of a trend trader, and I am more of a trend trader, I go for pivot trailing. I get more because I'm a very greedy trader. I'm sorry, but I am. I like to get more out of that, especially when we're getting a trending market. I like to get more out of it. So that's why I use pivot trailing. But listen to this. When the stock or the E-mini gets very extended and it gets to my last target, let's say target 3 or 4, or even beyond that, I continue trailing, and I go from pivot trailing to bar trailing. Why? Again, because I'm greedy and I want to capture most of the profits. Okay? All right. Here's some indicators that I use and we're going to shift to charts right away. I use the 2 simple moving average. You're going to see blue color-coded on my charts. I use the 10 exponential moving average, and this is used mainly for day traders, guys. For those of you that are day traders, for those of you that are swing traders in here, don't bother with it, but that is fuchsia pink on my charts. I use the 200 period moving average, and that is the simple moving average, and I have it marked with red. I have the 50 simple moving average, and this is for swing and position traders, and that is green on my chart. I have the 89 simple moving average, and this is for swing and position trading, and this is yellow. I do use pivot points, and guys, these are not floor pivots or what have you. No, these are pivot points. This is what they're called, and they're calculated based upon previous days high, low, previous days open, and current days. Past days, previous days close, and current days open, and volume. It is very important to have volume on the chart so you know when the heavy volume kicks in. Okay, guys, I told you that I'm going to give you an exception to the rule, and then we're going to go really quickly on the charts, and then I'm going to have time to answer all your questions. There's a, for those of you that are a little bit more experienced and know what ranges are all about and have been trading ranges for a while, you know that there's an aggressive advanced breakdown strategy. And it is super, super powerful, and it is, of course, it goes with smaller risk. Okay, you have higher odds of stopping out of the trade, but again, when it works, you have more odds of making more money in the trade. Okay, so the noises that you're hearing, guys, right now, and I'm in some trades and some trails, and these are kicking in right now. So these are the sounds. I have my platform on autopilot, so it's working. It's working for me while I'm not even watching it. Okay, so. In a very strong ongoing uptrend, traders can initiate buy action at the bottom of the base, above the support area, and place a protected stop right below the support area. It's very, very short squeeze point right there with a very small risk, using half the size or half the position. So I don't recommend you guys use the whole position size. Use half the position. As the trade advances towards the top of the range and it triggers a traditional entry, you can add the other half in. And by that time, guys, you already made profit. Okay, so you feel more confident, and once it powers up, okay, once it powers up, you're going to have more money in your bank than than a regular traditional entry with confirmation. And the same thing in reverse with the breakdown, right? You buy at that top of the range. You buy at the top of the range, and you add once it breaks below the base. Okay, this method can only be applied if stocks or ETFs or E-minis have been consolidated in that area for a long period of time, demonstrating strength or weakness, depending on the case. Strength for long and weakness for short. So you have to have a longer period of time. It is a little riskier, but when they work, they're really powerful. Okay, guys, 7 considerations, and we're moving to charts. Swing traders should, one thing we got to make it very, very clear. Swing traders should not take any kind of setups, not only breakouts or breakdowns, but any kind of setups at least a week before earnings. All right, I don't recommend, especially for beginner traders, even for advanced traders, okay, I don't recommend them to be caught in trades ahead of earnings. You might get lucky, like Alibaba, right? And the stock can take it higher, or you can find yourself on the other side of the trade with a tremendous loss. All right, so no trades ahead of earnings reports, right? No trades at all. For day traders, yeah, you could take the trades. You could take their trades after earnings, and this is for day trades. So after they report earnings, go ahead. Also, bases, in some cases, there are bases that occur in stocks that are going into earnings. And in those bases, again, don't take those bases for a stock that is due to report. Let's say today we have earnings in, I don't know, pick a stock, ABC. and we have earnings report that is coming in after market. That stock is probably going to is not going to do anything, okay, until it reports after market. So you're not going to take that. Also, among the 7 things that you should consider is have a defined entry stop, projected target, and a management plan in place before you even take the trade. Look for very liquid assets. Like I said, look for high volume stocks, okay? Don't you look for those really, really baby stocks, okay? All right. Trade in sync with the major market indices and major time frames, then this is key to anything right here. Let the winners ride gradually, layer you off shares as the trade reaches target and becomes more and more profitable. For swing traders, I have a rule, and if we have 2 or 3 or 4 targets, I usually advise traders at target 1 because target 1 is the easiest target to obtain. Layer half off. Take half the profits. You're going to feel so much comfortable. It's going to feel so much with ease, and then ride the other half. At target 2, it's up to you whether you want to take it off and just leave a quarter of the shares in for further trailing to other targets, or have the remaining position and have the remaining of the position on and trail it pivot to pivot. Okay. Use protective stops to exit losing trades. Once it reaches your stop, take your stop. Always monitor market indices and be in sync with market momentum. Very important. So is the market going higher? Focus on strong stocks. The market is pulling back. Focus on weak stocks. Okay. All right, guys, and this is chart time. All right, this is the stock that I've done my gosh, a year ago. And this is RAD. And by the way, I'm watching RAD right now for another possible entry. Number 1, the stock is trending on the daily chart. So you can see a phase 1 right here, consolidating, going into accumulation phase. Look at the base developing right here between $5 and $5.50 and taking off right here. This is the breakout entry right above resistance. And this is the support right here. This is where the stop should be placed, a penny or 2 below the support area, below this range. Remember, very aggressive traders can look to buy at the support area with a very, very tight stop right below this support area right here with half of the position. So if you want to take the trade, let's say, with 400 shares, you could take only 200 shares here and add the other 200 shares above this range right here. So the stock went to $8.62 and we trailed it at $8. The risk for the trade was 45 cents. As you can see, the difference from resistance to support right here. We made 5.66 R's on this trade. Profit from entry to target was $2.55. If you would have risked $1,000 on this trade, you would have made $5,666. Want to risk $100 on this trade? $566 win on this trade. This is a swing trade that we have done in our program. Another example of monthly chart, guys, and remember, that was a swing trade. RAD was a swing trade right here, and sometimes the bases are like this, zigzagging, and sometimes they're like this, okay, like I mentioned, like a Christmas tree effect. So this is the monthly chart on Breakout on CVS. And this was last year. The consolidation was last year. Breakout entry was at $63. This is, and again, guys, this is for the late. The R on the chart is the risk, the reward. Risk and reward are represented with R. Again, guys, this is for the laid-back trader. This is for you know, for those of you that are trading your IRA accounts. Okay, monthly time frame, perfect for IRA accounts, for position traders, laid-back investors with minimum management and involvement. Okay, you don't want to you really don't want to do a lot of work. Okay. So here's your entry, here's your stop. Remember, there's a high risk of buying right here, but again, it'll offer you more shares. It'll offer you more and more shares. Okay, you're very welcome, DS. Okay, current trail on this trade is $83.50. Current trail as of today, profit over $20.50 in about a year, okay? Risk $6.7, currently up 3 hours. So if your risk was $1,000, you're currently up about $3,000 on this trade. Or if you risk $100 on this trade, your reward right now is about $300. Here's another example. TMKR. Actually, this I've done this. I just came back from a month spent in Europe. I had a series of classes and seminars there. It was very exciting. First time that we've done it overseas with European traders. And actually, this was a trade that we've done live in class. TMKR was a power downtrend. And guys, this is a 5-minute chart, and this is for those of you guys that are day traders. We have a beautiful gap down here, okay? That we watched and has developed a beautiful, beautiful base. So you can actually see it's kind of like a descending triangle right here, but it's pretty much created like a wonderful base right here. Look at the breakdown right here. Resistance and stop will be placed above the range right here. The stop is at $20.75, and here's the entry at $20.49. And remember, this is a 5-minute chart. Your risk in this trade is of 26 cents. Trailage at the end of the day, we trailed it at $18.60. And guys, we made a profit of $1.89. That means 7.26 Rs, reward units, okay? So we risked $0.26. That is one risk unit right here. This is one risk unit right here, and we've just gained 7.26 risk units right here. On this trade alone, we've made $7,260 with a $1,000 risk. You don't need to risk $1,000. All you need to risk, let's say if you're a beginner trader, you risk $100, and you would have made $720 on this trade. This is how powerful these breakouts are, and they're going to continue to be because the market is still ranging right now. It's going to offer us tremendous opportunities even moving forward. We have a breakout in Intel Corp, and guys, this was last year, this was in March. No, it was in March this year. I even had a presentation in March. I had a seminar, and I called out this trade right here, okay? And the trade, you can see the zoom in example is right here with Intel. We have resistance, we have support right here. The entry was above $25, and the stop was below $24.50. And here's the trade recap. We enter long at $25 right here. Look where it is right now. Look where it is right now, guys. But we traded early. After we had this gap up, we placed our stop below the support line of the gap up right here, and this was our trail out at $33. So we didn't capture all the movement to 35, but we captured to 33. We had 44 Rs, guys, for a $1,000 risk. $44,000 on this trade alone if you have risked $1,000. Okay, you want to risk $100? You've made over $4,000 on this trade. That's how powerful these breakouts are. And watch for stocks and technology because these have the higher odds moving into the end of the year of forming these bases. Look for the Microsoft, look for the Intels, look for the Ciscos. For stocks like these in the technology sector, these have higher odds of working out. Okay, then Yahoo. Resistance, we have support, we have the entry right here, we have the stop, we have the trail right here, and on this trade, we've done 5.1 Rs. We've managed on a $1,000 risk per trade. We made $5,100. Here's another trade, ZTS, and these are all very recent trades. Look, this is a 2-minute chart. For those of you that are scalpers, for those of you that still don't believe in the strategy, okay, it can be applied at any time frames. Look at this risk, guys, right here. Okay, look at this risk. Entry, 38.67. Stop, 38.60. You did have an opportunity to get here. It ran without you. Here's your secondary opportunity to get in, to place a stop, and move forward into the end of the day. Here's the breakdown, guys. If you would have gotten both trades, I actually traded both these trades, and look at the profit, guys, $11,320 in both trades. over 5,001 trade and 5,700 in the secondary base. And all this, one trade here and one trade here, okay? All right, this is the power. KEG, energy services. Look at the base right here. This is a daily chart with a beautiful breakdown. Right here, this is the weekly chart represented here with the same setup and the target and the trail at $2.80. This is our current trail, our 280 cents. Here's another one, EXPD, that is developing. I got to take a look at it. I took, I didn't take this this base right here. I had to get ready for the class today for the seminar. But look at this base right here and the developing. Trade plan, guys. Remember, this is going to be with you. Please revisit this. You can take these trades at any time. Wait for the pattern to develop. Set alerts or limit orders so you don't miss the trades. Look for earnings season opportunities. Remember, guys, swing traders never initiate a trade ahead of earnings reports. And for those of you that are day traders, look for these breakouts and breakdowns that occur after 10 o'clock, more precisely at 10 o'clock reversal time, and wait for 10:15, 10:30 for the trigger time. What to look for, stage 1 and 3 trades with consolidation. Remember the strong stocks in a strong market and weak stocks in weak market. Time frames, any time frame, guys. When to enter the trade, you know the drill. 1 or 2 cents above the base, whether you're a day trader or a scalper, and 2 cents below the base. Set your target position size to your risk level, and remember, have a trailing method in mind. And for those of you that are interested in my advanced technical analysis class that I'm going to host next week, guys, I only have 50 spots available. It's going to be a really advanced technical analysis class. I'm going to teach price support resistance, trend line support resistance, intraday pivot points, fulcrums, psychological price areas, Fibonacci's. These are all things that you don't have to be intimidated with. They're super simple stuff. I'm going to show you how they work. This class is for day traders, swing traders, and position traders. And most importantly, whether you're an equity trader, a futures trader, or a forex trader, this class is for you. And as a bonus, if you're taking this class, I'm offering you 46 days of free signal service, so you could see, guys, that we're putting our money where our mouth is. So what we teach is what we apply, and you saw we have over a 75% batting average. So we beat the S&P. We beat by far most of the hedge funds that are out there. We have our own hedge fund, and it's performing tremendously well for this year. We have proven track records for the last 4 years. If you wish to see them, shoot me an email at info@tradeoutloud.com. If you want to register for this class, visit tradeoutloud.com. It is right on the first page. You can see it right there. Remember, there are only 50 spots available. And if you wish to connect, guys, remember, info@tradeoutloud.com. And if I didn't answer your question, please shoot me an email at info@tradeoutloud.com. And starting next week, I'm going to host live free classes, guys, so make sure you're on our email list to benefit. Why doesn't it work with Forex? Well, because Forex works differently than equities and Forex, and then equities and futures market, and bases are totally different than. There are a lot to explain here, but bases and Forex are different kind of stuff. So I'm more than welcome. I will welcome you in one of my free sessions, and I'll talk to you more about Forex as well. Also can give you my Skype address so you can, Skype me if you have any other questions. So happy to answer all other questions, guys. My time is up today. Thank you so much for having me here. Thank you, Dan, and thank you, MarketFest, for having me here again.